We've got the rand trading around 7.37, so a little bit of weakness coming through for the currency this morning. Of course, we did have a pretty quiet trading day yesterday, so do you think we're just catching up with some of the action at this point?
Yeah, good morning, Stephen. Absolutely. Yesterday's trading conditions were relatively thin due to that UK bank holiday, but in the afternoon we had that disappointing income data out of the States, and I think the mindset out there is still one of we are concerned about the global recovery. The world's leading economy's data flow hasn't been encouraging, and we saw emerging markets selling off in the wake of that poor US income data. We saw the Mexican peso weaken very sharply. Asian markets have weakened this morning, and of course the rand has really followed suit again. So we've seen that the rand is drifting towards the upper realms of its kind of 720 to 740 range, and it's all about investor sentiment again. And at this stage, people are still fairly gloomy about the global recovery.
Of course, we did have some economic data out this morning. That was money supply and private sector credit extension numbers for July. And it looks like both of those came in a little bit stronger than expected.
They did, Stephen. I think it still doesn't dilute the overwhelming expectations of an interest rate cut at next week's meeting. The FRA market, the forward market, have basically fully discounted a 50 basis point cut. We at Standard Bank also believe now that they will cut interest rates by 50 basis points down to 6%. And if we look at those money supply and credit extension data a little bit more closely, it's quite interesting to note that mortgage advances has been the biggest improver, whilst leasing finances excuse me, beg your pardon. While leasing finances tends to be the laggard still, which means that your demand for cars and any kind of other leasing finance still relatively subdued. The housing sector, on the other hand, as I say, is showing some signs of improvement, but still very sluggish growth by historical standards. So I think the South African consumer, the South African household could do with another interest rate cut.
Well, just taking a step back, perhaps, we had some local government finance stats out yesterday. We were chatting about those earlier. You said there has been some interesting developments there.
Absolutely, Stephen. If we look at those government finance figures again a little bit more closely, we see that revenue is up well in excess of what government was tabling in Parliament in February. And the thrust of the improvement has really come from VAT receipts. If we look at individual and corporate tax is actually pretty sluggish at the moment, contracting by about 4% on the year, whilst individual tax is running more or less in line with what was expected in February. But it's the VAT receipts that are really outperforming, shooting the lights out. And I suspect that that is largely due to the World Cup effect, because remember, these government finance figures refer to July. Now, of course, the question is whether or not those VAT receipts will remain as strong now that the World Cup's behind us. I'm doubtful, but it does seem as though the budget deficit is going to come in below original expectations, and it means that government has got more revenue. Now, what do they do with that revenue? Well, they're struggling to spend the money once again. Expenditure is down on original expectations. So my suspicions are that they're actually going to use that revenue to buy hard currency assets and continue to help the Reserve Bank in accumulating reserves. If we get another interest rate cut next week, it's also going to make it cheaper for the Reserve Bank to cut interest, at least to build reserves going forward, because the sterilisation costs and the opportunity cost have diminished. So all in all, I think we are pointing towards more accumulation from the SA authorities, both the government and the Reserve Bank. And in my opinion, that is going to be rand negative and probably stem some of the strong rand that we've seen in recent months.
Just looking forward, we have the trade balance coming out of 14:30, so that's 2:30 this afternoon South African time. We also have some European unemployment and inflation data, and of course the US house prices and consumer confidence. So all key things for the markets to be watching.
Definitely, and I think the trade balance is also possibly a negative for the rand. So I think there's a growing chance that we're going to breach that 740 to the upside. The trade balance the last reading was skewed by some port disruptions, and we got a surprising surplus. I think that's going to be reversed this afternoon. We're going to see, I think, quite a large deficit, and that will be rand negative from a balance of payments. And of course, if the data out of Europe, the States, the FOMC minutes tonight don't make for good reading, which they probably won't, then I think risky assets are probably going to come under pressure. So all told, I think everything's pointing towards a weaker rand environment, which is something that's going to be welcomed, I think, by the trade unions and a lot of mining houses, as you mentioned in your previous insert, and a lot of any other exporters in the South African economy. And of course, if we do see the weaker rand, then hopefully it will start addressing our rising unemployment situation.